Welcome to the Financial Health and Inclusion Deep Dive session. As folks make their way down, a few quick announcements. If you haven't already, make sure to download the Fintech South mobile app. From there, you can see the detailed agenda, connect with folks, and get more updates. Also, too, be sure to participate in Brain Date, which is our new curated meetings program available in the app and at the check-in at the desk outside the Georgia Ballroom. And of course, if you haven't already, make sure you visit with the 50 exhibitors in the Innovation Alley in the Georgia Ballroom Terrace on level 3. I am your host, Mary York, with Work Public Relations. I want to give a special thank you before we get started to our sponsor, Method, Michael Lewandowski. So I am going to hand it off to him, and he's going to get us started and kick us off.
Thank you, Mary. We're going to do something a little bit different to get the session started today. Rather than me tell you anything about Method or how we think about financial inclusion, we're just going to walk you through that and demonstrate how we as Method think about financial inclusion. So one of the things that jumped off for us about 9 months ago was we as a team wanted to form and just explore the financial health space on our own. And so a team of about 5 of us got together outside of our normal client work that we do and started to ideate around what we could do to help with financial health. Why financial health? Well, I think that's why hopefully everyone's here today to explore with us. And really, I think there's 2 sides to it. There's the challenge side of the equation here on the left, which is clearly that individuals in our society are in need of financial health. And on the right-hand side is the opportunity, which most of the financial institutions clearly recognize. That being, if they're able to facilitate things that give education around financial health, they'll develop deeper relationships with their client and ultimately more profitable ones as well too. While there's lots of data out there around the problem of financial health, the stats on the left-hand side really jumped out to me recently in some research I was doing, just in how late in life people were achieving in terms of their financial literacy and the impacts that has obviously as folks age into retirement. So when we talk about a design sprint and thinking about how do we develop solutions around financial health, where do you start? Well, we decided really to start in a place where we knew there was a great deal of viability, because viability is as important as desirability or feasibility. I've heard a number of people, some of which are in the room today, talk already about payments and how payments has been the place that's been most invested in and exploited and disrupted over the last 10 years. And so this attracted us naturally. We also leaned in and narrowed the problem from payments into e-com, really wanting to think about what we find is a really interesting dynamic between the merchants who have the stuff, the services, or the products, the payments companies, which have the means to be able to transmit and get the merchants' things over to the people, and of course what we call engagement hubs, which are really the owners of the eyeballs these days, particularly in the e-commerce world, things that consumers go to discover new things and to ultimately engage in commerce. These 3 parties have a very interesting, mutually dependent, and sometimes similar needs across that, but they're also competing against one another in that spectrum. While we talk about those 3 parties, anytime you're developing a new product or service, you have to think about the user first and what their needs are. And so we at Method not only ask ourselves what are some of the needs that we think about as we're shopping for things online, but we did some research as well too. And some of the needs that you see online were some of the things that jumped out to us as an experience that we could explore and start to incorporate into a concept around how financial health could be included into an e-commerce experience. Also, as you're getting started in a product development cycle, it's really important to have, and most often ignored and forgotten, to have some design principles that hold you as a team accountable to making decisions around what you're going to include in a product and what you're going to exclude. I won't go through all the design principles that we selected, but there are 2 on here that you'll see in a moment as I show you what we came up with that I think are unique and a little bit provocative So the first one is around consumer centricity and not consumption centricity. If you're going to go back to that first slide with the data around financial health, in order to truly provide value and help people with their financial health, you need to think about what's good for them, not what's good in terms of creating a transaction and ensuring that gets pulled through. The third I'll highlight is number 3 here, which is always present but not necessarily Big Brother. This is a prevailing thought from consumers as we do a lot of research in this space around we want things that can be available for me to help me make decisions, but I don't want things necessarily always looking over my shoulder, maybe intrusively providing me advice and guidance. And so this became a concept that we wanted to explore as we move forward. Last, before I get into actually what we developed as a solution and show you a little bit of that, we wanted to obviously conduct some market research. So what's happening within the space, what are some things within financial services that we can draw from, and also what are some things that are outside of financial services that are interesting in this space. That side is often forgotten. A lot of times we find with clients that we work with, they're looking at who's being successful and they're trying to mimic that success, which doesn't really create any differentiation in the space. So there were 3 areas that we really explored from a competitive perspective. The first was e-com and just what happens in a checkout experience and what are some of the variables there and who's doing that well. Of course, financial wellness was a critical component of it. And then lastly, the one that surprised, I think, all of us was really this notion of browser extensions. If we go back to that third design principle about something that can always be present while you're shopping, but not necessarily looking over your shoulder, that can be toggled on or off, there's some really interesting things that happen in browser extensions these days, whether you're talking about Grammarly to do corrections of what you're typing as you're going through running various things online, to actual things within financial service space. If you look, Affirm, Klarna, others have already actually released browser extensions as part of their product suite. All right, so we're going to jump in and show you what we actually came up with. It's a concept called method money. To be clear, this is not in the market today. This is purely fun and entertainment that we had and the outcome of our exploration. The demonstration that you're seeing on your left is an e-com shopping experience for an uni, because who wasn't shopping for an uni in the last year? It also hits a price point that's a very interesting one within the space that, is one that's explored by a variety of payments providers. As the shopper goes through, they're presented a variety of different options to choose from that would have been pre-selected as they go through. And in this case, we chose the most provocative case in which, from a financial health perspective, the Method Money app actually makes a recommendation to delay the purchase based on cash flow. And so in this case, we're looking out for the consumer, that consumer centricity over consumption centricity, and really making a recommendation around when might be a better time to make a purchase based on their credit card balances, getting back to those stats on the first page. This will flow through again here quickly, but as we call it out, one of the things that we really wanted to explore was really how behavior and behavioral insights would be something of value to consumers. If a consumer can understand how often they're making a decision based on speed, one of the things that we factored in, how quickly can this be delivered to my house, on rewards, how much rewards am I getting off of my credit card, the company I'm working with, or my financial health, and they can get some insights on not only how their decisions are driven, but maybe even how their decisions are driven versus others. They can change behavior and allow them to make decisions a little bit differently as they go through. So this was our concept, Method Money, something fun that we jumped in and explored over probably a handful of weeks with just a handful of people. We did want to call out that in this process, we were only designing for what would be a target state. And anytime you're doing product development, you should not think about the perfect state and how someone has already adopted your product and provided you all the information needed to be successful. But how do you actually think about the engagement from first attracting them into your ecosystem to connecting with them, giving them value, allowing that value to continue to allow them to share more with you as you drip more value to them, developing that deeper relationship and ultimately getting to that target state. And so that's often also forgotten in the product development lifecycle is the assumption that you can jump immediately to and you have the trust of your consumer to be able to have a deep and meaningful relationship, particularly in financial health and wellness. We've seen that missed often by account aggregation and other services that assume you're going to link all your accounts and that's going to be the state that you want to have an interaction with a financial institution. That's all we had. I want to call out that there was a great team that was behind me as we developed this of product experience design and product designers. And this is the team that huddled together outside of client work part-time for a handful of weeks to go through a product lifecycle. Hopefully, a little creative juices flowing as we get into the panel today and thinking through ways in which financial services can help meet the needs of consumers, both from doing well and doing good part, which is a panel we'll jump into later. how does it benefit both the institution but also the end consumer. All right, with that, I'm going to hand it back to Mary. Mary, thank you so much.
All right, our first session for the deep dive is FinTech Goes to Work, Powering Financial Health in Workplaces. So I'm going to welcome to the stage up front here, Kim Ford, Senior Vice President of Government Relations for Fiserv, Jessica Kemp, Senior Vice President of Product for Highline, Tal Clark, CEO of Instant Financial, and Brian Tate, President and CEO of Innovation Payments Association, will be our moderator. So thank you for joining us.
Well, good afternoon, everyone. I'm Brian Tate. I'm the President and CEO of the Innovative Payments Association. We're a trade group based out of Washington, D.C. We work with our members to develop positions and responses to regulatory proposals and legislation in Congress. We also engage with the media. Our members represent the broad spectrum of payments companies out there, from networks to issuers to program managers to fintechs. So I'm lucky to be joined on stage by two of my board members and soon-to-be board member. She doesn't know it yet. But I'll do brief introductions and then we'll get right down to it. So the first introduction is Kim Ford, who leads Fiserv's global government relations functions. And she has an extensive career. I know that personally because I've worked with her for a very long time. She started off at First Data back in 2004 when the biggest news was that debit card spend was catching up to checks. My second guest here is Tal Clark, CEO of Instant Financial, where he leads the organizational strategy behind the industry's leading responsible earned wage access products. With over 20 years of experience in the financial services industry, Tal's leading the change at Instant, where change that is helping employees to get paid. And my last guest today is Jessica Kemp. She is the Senior Vice President of Product and Marketing at Highline Technologies, a payment network that enables consumers to automate payments directly from their paychecks. Her team's mission is to improve outcomes for consumers and billers alike, facilitating greater financial wellness and access for all. So I guess our conversation, just to kind of lead it off, is that I'm sure we're all aware, we've heard different statements and stories and research about financial wellness. And it used to be that people separated work and home, and that your finances were kind of a personal matter. You didn't really kind of bring your personal life to work. But I think we've been learning over the last decade or so that to have a holistic solution, you have to have not only your personal life, but your public life or your work life come together. And I think employers are recognizing that if there's benefits for them. I think the employees are recognizing that there's benefit for them as well. And there's an opportunity for employers to help their employees. And when they do, I think the research is pretty clear that you get more investment from your workers, you get longer hours, you get more shifts, you get more income volatility, you mitigate income volatility, you provide more stability for them, and they reward you with their dedication. So we're going to jump right into it, and I'll start off with my first question here for Jessica. What evolutions in technology have most significantly contributed to supporting financial health in the marketplace?
Yeah, that's a great question. I think, before you even get into technology, I think it starts with consumers first, right? There's been a lot of demand to have access to your money faster, and I think we've seen the technology kind of step in, be it alternative payment methods or faster payment rails, to be able to kind of drive that need for consumers. And I think it's interesting. We kind of saw this start in the gig economy first, and now it's almost now making its way to the W-2 workforce, right? I think a great example is what happened with taxi cabs. It used to be a cash business. You got paid immediately as you took the ride, and then Uber came along and fixed a problem for consumers, but created a problem for that worker, right? Because now the person who was getting paid in real time every time that they took a fare was getting paid in batch at the end of the week. So we saw some early kind of drivers there, push to debit, ways for those drivers to be able to access those funds faster. And then you started to see this creep over into the W-2 workforce. And we've had this concept of payday from a accrual, bookkeeping standpoint, which makes sense from a financial aspect. But from a worker or an employee, you go, well, I worked today, I generated that money today, why can't I access that money today? So it's really paved the way for solutions. We've seen, early wage access. I didn't tell you, we're going to talk a little bit about that. But faster payments, how do we push this money to them sooner? And how do you give them other alternatives that aren't necessarily just, lending products, but actually, closing that gap between payday, bill payment, what it is that you need to be able to do with your income.
Tom, can you touch on a little bit about EWA, earned wage access, payroll cards, and other options employees may have?
Yeah, I'll do that. But first, I want to recognize that Jessica's probably got the coolest shoes up the show, so got to call that out. So we have been, I think we really started focusing on employees 20 years ago, if you really think about it, creating debit cards for employees who didn't have access to electronic commerce at the time, right? And that's what commonly became known as payroll cards. And that was really the first innovation that I was aware of that we were a part of that started bringing the opportunity for employees, regardless of their banking status, to be able to participate in commerce, things like pay at the pump. And then we fast forward today, we sort of build on that with opportunities for earned wage access. And as you see these things develop, you sort of think, it's the employee's money. It's always been the employee's money, and we believe that they should have access to that money each day at no cost. And so that's what we're working on. That's where you see earned wage access developing, make sure that's available. And that'll continue to evolve, right? We'll continue to look for ways to get employees their money the way they want it, how they want it, when they want it. So I think that's going to be important to make sure employers and the industry adopts as we move forward.
Kim, can you talk about how employee and consumer demand has evolved as technologies evolve?
Yeah, I think so. I've been involved in some of the faster payments initiatives over the years as well, and something that we would talk about with the Fed, and then certainly internally within Fiserv is, even if, let's say today, from a bank's perspective, right, they may or may not be getting a lot of demand from the consumer about faster payments. But I say, you've got to widen the aperture on that, because I think from a consumer perspective, and we're all obviously consumers sitting in this room here, as most of our life has had things that have become faster, easier, right? Like the things that we can do on our cell phone, the things that we can access, from our computer. I think that most consumers just have a natural, they just are going to assume that payments will have that happen as well, right? So even if they don't know to maybe ask their bank or their fintech for a faster experience, I think that we have to assume that they're going to think that that's going to happen anyway, right? Like otherwise, why are we putting all these investments in technology if we're not going to speed things up, but also obviously reduce friction, think about fraud and fees and all that, which we'll get into on the regulatory side later.
Well, I want to kind of expand the conversation a little bit. Where do you think the opportunities lay for the industry to better support employees and their financial health?
Yeah, I think we'll continue to innovate around some of the things we're doing now. Look, if we look at what's happening with earned wage access, we know that today that 86% of employees or potential employees are more likely to take a job if they have access to their wages each day. So that's an innovation that's both helping the employer and the employee. And we know they're more likely to stay. So we see retention go up when they have access to their pay each day. We think it's important about how you provide that and in what form you provide that in, and make sure they have that access in a way that's meaningful to them, in a way that's not costly to them. And so we think that's important that as we keep going forward, we continue to innovate and make sure that access is there for employees. And we see that, again, building on top of things we've done previously in card programs, building on top of that with EWA, and I think we'll continue to evolve that.
Jessica, I'm going to ask you the same question, but put a little different spin on it, which is, we have all these new products out there, but do employees necessarily know that all these options are out there for them?
I would say no, they don't, right? So a lot of how these come to market, you see a lot of solutions that are, sold through employers. So you need to get the employer first, then you need to get the employer to enroll their employees. You also see, there's kind of a paradigm shift going on right now with payroll companies. They've always sold to employers. They're now getting closer to the employees, to the consumers, right? They're consumer platforms. That's how they view themselves. And they're really kind of changing and evolving and trying to figure out how to put, marketplace tools, build super apps to really get more in front of the employees. And there's some instance where they're available if you're pay card, something like that that's getting pushed to them. But when you step back and look at the bigger problem, which I don't think is getting solved for employees and consumers right now, is there's a big disparity between when they get paid and when their bills are due, which is exactly what Highline's stepping in to do, is to create this payment method, pay by paycheck, to be able to actually route payments directly from consumer incomes and be able to spread that out across paychecks. So, there's a ton of options out there. We're seeing a lot more in rent spreading and a lot of these other really interesting, innovative tools and solutions that are designed to help the consumers kind of either better manage funds or close that gap. And the challenge is a lot of them are either going direct to consumer, where it's that let's go to the employer to the consumer standpoint. And the challenge you have is the more people in a chain that you need to promote a program, it's a little bit harder to actually get it into the hands of people. It's like that telephone game you used to play as a kid where you would turn and whisper, and by the time you would get to the end, the message was distorted and it wasn't exactly what it was in the beginning. So I think the more that you can kind of close those gaps and really have a direct conversation, the more empowered the consumer and the employee is going to be to actually take advantage of some of these technology products, solutions, and offerings.
Question. I think about this all the time, like, especially you go to a great conference like this and you see how many awesome fintechs are out here, right? And how many amazing ideas and new features and all these things. And so from a consumer perspective, how do they even know where to turn, but then also like who to trust, right? And so are we still seeing consumers go to like a bank, for instance, or a credit union who is still, I think, seen with a lot of trust, but then, that financial institution may not even offer all those products. So like, how do you think about, like, as you just said, getting closer to the consumer? How do you think about like cutting through all of that noise out there?
Yeah, no, that's a great question. And also when you think about, to your point, startups, small companies, and I don't know if you're aware of what the fundraising climate is like out there right now, you're not going to be able to build a $100 million consumer brand, right? I mean, it's very difficult. So you have to find ways to get to the consumer in a trusted manner, right, through an entity that they trust. For example, one of the ways that we're going to market is working directly with the merchant. So if you have a T-Mobile bill and you want to be able to pay that bill, right, you'd be able to enroll in our payment solution and access it from that regard. Is there a point in time where we'll probably go out and build a direct-to-consumer brand? I imagine so, but let's be honest, it's really expensive to do. And the challenge is when, exactly as you said, you come out, there's so many options, you don't know the name of the company, there's so many like fly-by-night, tech disruption going on, right? Is this one going to stick around? What's going to happen here? You see people tend to go back to the traditional methods that they are comfortable with, right? So I think there's a lot of opportunity, and I think you're going to see far more partnership kind of distribution, partnering with the large companies like the FISs, the Fiservs of the world to be able to access some of those bases as well. I think that's why you see a ton of partnerships and integrations going on in the fintech space.
Tal, do you see, I guess you work with employers, and when you talk to your partners, did they share with you how their employees may feel overwhelmed? If somebody just came to me and I wasn't aware of this technology and that this is an option for me, as Kim pointed out, like, should I use this or not? Who do I trust? How do you overcome it?
Yeah, I think one of the things, just us as an industry as a whole, we continue to communicate and make sure that the people we work with, we work with Fiserv, we mentioned partnerships. So we have a partnership with Fiserv. They have a presence with, a large number of enterprise organizations out there. And so we got to communicate in such a way that the employer understands what we're doing and they're able to communicate that to the employee and just make sure that's available. We have always found in these type businesses that a B2B distribution point is the way that ends up working for not only for businesses, for early stage companies that are trying to both raise capital and build revenue, but it's also the best distribution point to get to the consumer, right? We do know also, though, that consumers prefer to see options outside of their employer. That's why in many cases in the payroll card space, you've always seen about 20% adoption. We see that changing a little bit. You see neobanks becoming more prevalent and more of an option available for consumers. And so for us to build partnerships, Highline, Fiserv, to build partnerships that are relevant both to the enterprise, then they become relevant to the consumer. And I still think we've got to work those channels to make that work as we go forward.
as we talk about all the options out there, where do we see things going in the next year, year and a half, 2 years? Are there going to be more options, which are generally considered to be beneficial for the consumer? Or are we going to see, winners and losers, or just there's a giant toolkit and the consumer can just pick which tool they want to use that day?
Yeah, I think that look, again, everything we've been talking about is focused on the consumer, and in this case, the employee specifically, right? And I think that continues to be the case. And we need to evolve technology to make sure they have the options they need, whether it's Highline for bill pay, whether it's making a different choice for where their pay goes. I mean, it's, their choices historically have been limited into the last 10 or 15 years. It was limited to a traditional banking environment, which may or may not have been a fit for everyone that was working at that employer. Now we see those options opening up, right? You have neobanks, you have the opportunity to choose how you're going to get paid, where you're going to receive your pay. I think it's, for us, and I think the rest of the fintech space it's the obligation is on us to make sure we continue to create opportunities and options for that employee, to make sure we help the employer serve them better, and make sure that consumer has access to all the great things that we can do, represented by this conference. And again, I said it earlier, how do I get paid? Where do I get paid? And when do I get paid? That's always been in the hands of the employer and the payroll companies to a large extent. And then more and more is becoming in the hands of the consumer. And that's where I think we all want to move it to.
Jessica, I'm going to ask you the same question, but do you see adoption increasing over the next year, or is that the trend?
Yeah, you always want to believe that adoption is going to increase, right? It's a story in the narrative you want to tell yourself. No, I do believe it will, and I think that technology, look, consumers will keep driving that. I think technology as well, right? We've seen changes in the payroll companies opening up with APIs, right? And one of the major changes I see coming is, the concept of open banking that's been, commonplace around the world is coming to the US, and I think that you're going to see that extend into payroll companies, right? So, it's great to go access, what do I spend or do out of my banking account, but getting closer to payroll tells you so much more about me as an individual, right? It tells you my tenure in work, it tells you my income. There's just richer data there and opportunities, and I think as the payroll companies start to kind of embrace that, these open platforms, I think there's going to be a ton of adoption, not just for the things that we're doing, but for solutions we haven't even dreamed of or imagined yet, because so much new opportunities are going to get opened and unlocked as a result of that.
Kim, I'm going to ask you again the same question as the first two, but again another twist here. As the policy person up here, to me the most important thing to remind people of, it's their money. At the end of the day, it's not your employer's money, it's not third parties, it's your money. So keeping that in mind, where do you see things going policy-wise or even on the product side?
Yeah, so what kind of lobbyist would I be if I didn't put a huge damper on the enthusiasm and optimism from all of this scary regulatory overhang coming out of DC and the States? So, I think, so just stepping back for a moment, so I sit in DC, but I'm in a lot of state legislative capitals or arenas as well. And I think, where I've seen this evolution, and now I'm really talking more on the federal side, a few years ago, I think if you looked at where the FDIC was going under, the Republican chairwoman, Yelena McWilliams, I think she was really trying to have banks and the regulators embrace fintech in a way that hadn't up to that point been happening. And one of the things that she was really championing before she left was, again, kind of this idea of cutting through the consumer noise. Also for banks, how do we cut through some of the clutter with fintechs and help, financial institutions feel more comfortable about embracing and partnering with fintechs? Then we had, a presidential change. We've got very different mindsets, of the folks that are leading the agencies now. And I think there's now this kind of back to being a bit of a crackdown, on fintech, a lot more, substance to, the third-party guidance that's come out about what banks, need to be doing with fintech. So I think, for one thing, that worries me a little bit, because that can, dampen the plans of, fintechs that want to accelerate. But I think, you also have to look at beyond what the bank regulators are talking about. Certainly you have the influence of the Consumer Financial Protection Bureau. And, that tends to, kind of swing back and forth depending on who's the leader. But under the current director, Director Chopra, I think he's definitely taken a page from one of his predecessors, Richard Cordray, where he thinks about, okay, so these are great innovations, and yes, it's the consumer's money, but we also need to make sure that all of these types of terms and conditions are transparent, right? That folks understand what they're signing up for. And I think most importantly that you'll hear in especially the EWA discussions in the policy arena is let's make sure we're not setting up debt traps, right? I mean, you have a lot of criticism from a lot of policymakers about, payday lending historically. And so I think there's some nervousness about, trying to ensure that EWA doesn't kind of go down that path. And of course, there are various models for EWA. But I think, and even to your point about the rich data, I think, where the policymakers will wave the caution flag is, again, making sure that the consumer, whose data it is, whose buying habits these are, right, whose money it is, that they do understand what they're getting into and that they have some level of consent and control over how that data is accessed and then shared.
I want to take a pause with the panel and try to bring the audience into the conversation. So I just want to see if anyone, I didn't even finish my sentence right there. Sir.
Hey, how are you? I love both these products. I think that super bullish on them into the future. Can you speak to where the employer is participating in these programs? Are they contractually obligated to promote, support the process, et cetera? And then part two is, what are the revenue models for both of the companies?
Yeah, I'll start and then let Jessica jump in. So look, from an employer perspective, we are a B2B provider, so we're signing an agreement with the employer, and those agreements do have some sort of soft obligations for them to really participate and introduce the solution to the employees and make sure that it's available to them, right? They do, I would tell you that employers fairly do a varied job on how well they participate, once they're signed with us. We do everything we can, obviously, to work with them to make sure that the communication is there. The best way to do that is put that on the front end, so when someone's hired, they understand that they have access to instant pay, to earned wage access, and this is how you sign up for it. And so it's not in the hands of a manager or an HR department. It becomes sort of automatic and part of their onboarding process. That's the ideal, and that's where we strive to get to. And then I think as far as revenue, we are based on a interchange model. So many of you might be familiar with the legacy payroll card programs that are out there. Those were always generating revenue based on interchange and the occasional out-of-network ATM fee and that sort of thing. That's the way Instant Model is today, but I see us innovating and evolving sort of as we go through with that as well. So that could change over time. But it is an interchange-based model. Funds are loaded to the card. What that does great, though, is that allows us to make it free to the employee, right? Because we're not dependent on them to pay us fees. We believe that's the correct model to be in.
I would say we're quite similar. We are partnering directly with the payroll providers. So we look at ourselves as a payment network. We are the rails behind the scenes. And we're really riding the rails of what those arrangements and agreements are with their employers. So we're supporting, helping the payroll companies kind of promote where not necessary or required from a consumer standpoint to get to the employers and the employees. And then our revenue model is also, it's a pure payments play, right? So we are very much the same, similar to what looks like interchange to be able to process those. And those fees are paid by the merchants, those who are collecting those bill payments, and also making this completely free to the consumers. We're trying to offer this as a benefit to them to help them close that kind of disparity, that gap between when they get paid and when their bills are due, so that they can spread that out across their paychecks and do so at no cost to them.
Are any of these programs packaged as group benefits, or is this something beyond group benefits? And has group benefits being looked at as an area to actually get to the market?
Yeah, right now, no, we're we're partnering directly with the payroll companies, kind of as platform providers and distribution partners, so to speak, right? We're getting access to their consumer base to be able to facilitate those payments. But we are actually we will expand into looking at this for more of a benefits play and working through some of those brokerage outlets as well.
So far, we believe that earned wage access ultimately becomes the sort of table stakes benefit. It becomes the 401k, right? If you're going to hire and retain employees in this environment going forward, and it is their money, by the way, right? And so we do believe it's moving to the point of sort of a benefit that most employers will have available. We are hearing from and talking to some of those brokerages that would be offering that as part of a benefit package going forward. So we think it is in the future for sure.
Yeah, question over here. Yeah, David Bacon, I'm the marketing director for Corrente. You've talked about in the financial health and how Fintech promotes this, and obviously speed and access and alignment of expenses to bills to income. But financial health is also a solid savings plan and an investment plan. So I wanted to know, if not your companies themselves, where is this type of thinking and technology available to help those build investments and savings accounts along with providing the access and speed and time?
Yeah, look, our mission is pretty simple. It is to help, look, we're working with a lot of lenders as well to be able to offer low cost credit, right, for those who may not have a good FICO score. So everything we're doing is kind of in that play. So not so much us looking at the savings element of that, right? That's not what our product suite is. It doesn't mean to say that we couldn't be the funding mechanism for accounts like that, so to speak. But I think you see a lot of that kind of coming through other ancillary disruptors, right? So, if you think, for example, like a Robinhood, you probably look at that and you're like, oh, I buy crypto through there or fractions of shares. They're actually starting to look a little bit more like Fidelity as well, right? And direct to consumer. So I think there's a lot of these solutions coming into play in a more mainstream way that consumers are getting access to. And I think that's great. I think the challenge with that, though, is that's a direct-to-consumer model. And I think what you're hitting on is the crux of where they need to be, which is how do they get closer to that consumer? And I think a lot of that is how do they get close to the payroll companies to be able to work through some of the employers to offer some of those alternative plans as well.
Oh, yes. Just quickly, I do think there is a huge gap still, though, as you think about, just basic financial education, literacy, right? And it doesn't appear, there I think are gaps in some school curricula out there. So I think that that's an area where it does make sense if you think about that trusted provider, and if that's information that you could arm, say, employers with, in addition to then having, the apps out there, it would be really well received, I think, by a lot of employees.
I'll just add a little bit. Kim represents Fiserv, and they have a money network program that I know has a savings account within the app. And so you see some of that's out there. Budgeting tools are within the app. We'll continue to build that in our program going forward. But the reality of the situation is, there may be some of you here that are in financial health startups or launches and things like that you're selling to employers. We've seen historically, look, we're dealing primarily, we know that we're dealing with consumers, employees that are making $50,000 a year and less, right? And just over the last 20 years, I've seen a lot of these come and go. And while we all have good intentions and we all want to get there, often financial health means getting from paycheck to paycheck in many cases, right? And I think that's where earned wage comes in to help them sort of bridge that gap between paycheck to paycheck. And, we'll try to continue to build on financial health, but in many cases to them, it's just, hey, do I get to the next paycheck?
Yes.
There's a company out there called SecureSafe, as an example, and they offer it through employers, and it allows the employer to match the emergency saving amount that the employee puts in as an added benefit. And so I thought it was an interesting point that these people who are often utilizing your service live paycheck to paycheck, but having the employer kind of supplement their ability to save is really interesting, I think, as well.
Yeah, it really is. Sounds like a great program.
What's the name of the company again for everyone?
It's called SecureSafe.
Well, are there other additional questions? if we have another moment or two, I'm just going to throw out one more question. I think part of this conversation needs to be taking place in context. And so if these products weren't available, what would be the employees or employers' options to help them?
Yeah, that's a great question. I'm sitting here trying to think how I'm going to answer that. I think if these products weren't available, employers would have to develop these options on their own. I think that, look, employers do need to have a greater role in helping employees access these tools that we're talking about and make the decision for the right tools to provide their employees. I think in some cases we'll see employers make quick decisions, I want to select a provider for this product, and they make a quick decision versus maybe digging in to make sure they're making the right decision, and therefore making the right decision for their employees and employers. I think that at the end of the day, access to their funds is what we're focused on, and to the extent that employers could find other ways to do that, then we would encourage them to do so. We're always going to have a path and a route, but from an employer perspective, they should be, how do I get more money and money sooner to my employees and build these type of tools that Highline and others have.
Yeah, and I would say, the traditional route, if you look, most large employers have emergency access funds, right? So they're offering that as a benefit. Is that ideal? Well, no, that's usually when somebody's in a really tight spot. They've pulled money, and there's certain qualifications that you have to go through. There's application process. You get selected. But all of that was created by employers knowing that there was a need. And the challenge that we have that everyone's hitting on here, and all these questions are great, is that not only is there a need, there is a way to distribute these products, which I think is through the payroll providers, as we're seeing. But I think we're only at the tip of the iceberg as far as some of these solutions that are coming to play. Where we started was, let's give you dashboards. I think the presentation before we came up here. You could go to Mint before and some of those and link all of your accounts. I don't know about you. I'm also a skeptic. I've been payments for 20 years. So I'm not giving anybody access or giving them my login credentials. I kind of laughed at that when everybody was doing that with Plaid. Like, why are you giving away your credentials? Anyways, that's a whole other, I digress. But, I think we're coming to a point where, the fact that these things aren't there, where there is a gap, where there is a need, people will find ways to get there. Look at what happened with, the Ukraine and Russia. People wanted to figure out how to get money, and they started using Airbnb as a way to funnel funds into the Ukraine. That was a out of this world business case, which goes to show where there's a will, there is a way. And I think that we're going to start to see more and more financial solutions come to play that recognize these things as gaps, that now realize there is a platform for delivering these products and services. And there is a way to do it that is consumer driven, that doesn't necessarily need the employer. Or, you get access to the payroll company, they're opening up marketplaces now. You can throw an app in there and be able to do a lot of these things. So I think we're going to see a lot of new product solutions and services focused on this very problem in the coming years.
I think we're almost out of time, but I do just want to end on this. I think when you see next month that the CFP comes out with the 1033, open banking rule, and that will be the first time that there is any sort of regulatory framework on open banking in the US. Yes, open banking has been happening for years. Like, this is not new to us, but I think from a consumer standpoint and the fact that, from that consumer experience, there will now be consent, there will be a lot more disclosures. You think about now the people who were skeptics like you, and now under this new rule might feel much more comfortable sharing that kind of information. Maybe it's not going to be screen scraped, it's API based, right? It's tokenized, credentials that get deleted immediately. Like, I do think that that's going to also change consumer behavior and present a whole bunch more opportunities, tomorrow that we haven't even actually thought of today.
Any last second questions? Well, I just want to remind this was a great conversation. I think it's important to keep things in context in terms of what is available. There are no perfect solutions, but one of the things I think I've learned, and hopefully you did, it takes a team. So if you're, come to an employer, you start a job and you don't have a bank account, or you don't even know what your options are, there is a little bit of burden on the employer to help you figure that out, let you know your options, and what can you do when things happen that are unplanned. Or unscheduled. And, we're, like I think Jessica said, we're at the tip of the iceberg here for products. Things will eventually continue. But again, if we keep in mind today what the options are today, if something bad happens, either a payday loan or some other nefarious product, I think we've made a lot of progress. So I want to thank our panel today. They'll be here for a little bit afterwards if you have questions, but thank you for the opportunity to have this discussion.
All right, up next, we have joining us Alexandra Raymond, product designer and Prime Video Finance at Amazon and Studio. She's going to be joining us here momentarily to talk to us about competition as an innovation strategy, boosting profitability to all investigative designs.
All right, so when we change the way we look at things, the things we look at change. When we change the way we look at things, the things we look at change is essentially what got me interested in the topic of inclusive product design and how I got in front of you this morning. The story is actually very simple. I remember a while ago, I was at a tech conference and I heard the statistic that will forever change the way I look at innovation in the fintech space. 7.1 million Americans today do not have access to something as basic as a bank account. Now, I don't know about you, but when I learned about this statistic, I was shocked. And in that moment, I had a choice to make. I could either stand there and complain from a place of feeling powerless, or raise my voice and amplify the message that what this means is that there's a huge part of the population that's currently untapped, not being served by financial solutions, and they're actually a business opportunity. As a Black woman in tech, a foreigner living in the US, and as a child of immigrant who had to be the first in so many steps of my career, it was my duty to really kind of like showcase the business opportunity of this untapped segment of consumers. In case you don't remember, hi, my name is Alexandra Raymond. I am a finance product manager and fintech speaker, and I am deeply passionate about championing for inclusion as an innovation strategy. Now, I want to do one thing and one thing only. At the end of this presentation, I want to make you a believer. I would like you to believe that building products with an inclusive lens is actually a winning business strategy. So hopefully, if that's okay with you, that's the one takeaway that I would like you to leave here with. But before we start, I want to illuminate the villain. I know that some of you are probably thinking, why should I even care, right? Why should I think about diversity and inclusion when I think about things that should directly affect my bottom line? Why should I think about inclusion when I'm thinking about profitability? Let's look at a few numbers, and hopefully these numbers will change your mind. 1 trillion, the market for global disabled consumer. 1.7 trillion, the purchasing power of the US Latinx community. 1.4 trillion, the Black spending power. 18 trillion, global women's income. 917 billion, the US LGBTQ market. And so this is the opportunity that is left on the table when we do not build financial solutions to tap into this market. So hopefully some of you are like, all right, I think that this is going to make sense, but where do we even start, right? And so I don't have a lot of time. There's so much to be said about the concept of inclusive product design, but I decided to share 3 main messages with you this morning, right? First of all, what do we even talk about when we talk about inclusive product design? Then what are some tools that inclusive product design concepts introduce to help identify opportunities? And then third, how can we actually apply these principles right now? So what are we even talking about when we talk about inclusive product design? It's actually very simple. It's being conscious and playing an active role in building products that will be accessible to all users, plain and simple. This is actually not a new concept. A lot of companies, a lot of big tech companies have been introducing this concept, using this concept, and reaping the benefits of inclusive product design because they chose not to believe in the myths that, oftentimes stigmatize diversity and inclusion. Myths such as, well, this is all nice, but it's only for a small set of users, right? If I design a product for someone with a disability, they're the only ones that are going to reap the benefits. I don't know about you, but there's a small company called Nike who developed a shoe that was quite the phenomenon. This is a Nike Go Fly Ease. It was initially designed for people with dexterity disability, so they could have a solution to just, put on sneakers without having to use their hands. As a positive consequence of this shoe became loved by sneakerheads. It became a huge hit for Nike, and so kind of like busted the myth that designing for overlooked consumers is only for a small set of users. Another myth is it's only for a certain industry, right? Alexandra, it's so easy for you to take a product as an example, but what about fintech? Let's take, for example, the African fintech company called M-Pesa. M-Pesa decided to actually only focus on a part of the population that was not served by financial services, by allowing them to do financial transactions by using something that was already in their hands, mobile phones. As a result, M-Pesa has grown to become the top revenue earner of its parent company. What about innovation, right? Why am I going to waste my time thinking about inclusion when what I'm trying to do is innovate? Have you heard of a small company called Square? Square is a company whose mission is actually to build for everyone, right? They design products specifically to cater to consumers from the local merchant at the farmer's market to more established companies that just need payment solution. And Square is actually not the only company doing this. As a matter of fact, Fast Company wrote an article in 2021 showcasing how huge companies such as Nike, Google, Unilever, Microsoft are actually cashing in big time on this little concept called inclusive product design. So at the end of the day, it's not a new concept, and it's really about making sure that as you're thinking about the design and the features of your product, you're thinking about ways to design products that will appeal to this huge untapped market. Inclusive product design also presents tools that help you identify opportunity for your business. I could kind of like go over this slide and show you all the different ways that it can help you, but instead, I'll focus on the concept of inclusive design thinking and the concept of dimensions. Most of you are very familiar with the concept of a customer avatar, right? We're trying to launch this product, we're trying to think, who are we going to market this product to? Let's build a persona that we'll have in mind as we're building this product. I went on Google and I was like, hey, what's a good example of a customer avatar? And one that kept coming up is Agency Jimmy, right? Agency Jimmy is a male, 40-year-old, married, 2 children, looks great, right? Actually, what if I told you that this is actually a little problematic? What if I told you that Agency Jimmy and I, we actually have almost nothing in common except for our purchasing power? And that by building with Agency Jimmy in mind, you're actually saying no to my dollars that I'm willing to spend in your company. And so building products by using customer avatars that are unidimensional is a very generalized representation and ignores a wide range of unique characteristics that potential consumers can have. And so inclusive product design introduces the concept of dimensions of diversity. As you're designing your products, how do you think differently about features? Let's say, hey, if Agency Jimmy was a woman, would I change something in my features to make this product also appealing to women? If Agency Jimmy was 20 years old and not 40, what would I change in the way that I'm introducing my product to make it also appealing to a different part of the demographic? And so on. And so for each dimension of diversity, as product designers, really asking yourself the question, what can I change in my feature to make sure that I'm going beyond the one dimension that I gave to my consumer persona? All right, and then, all right, this is cool. I gave you a definition. I told you that other companies have been using this, but what are ways that you can actually, take away something from my presentation and apply it to your teams, your companies, and start having conversations on why inclusive product design matters. And so I was thinking about what's the best way that in 20 minutes I can give you a framework to start having these conversations. And I came up with this concept or framework that I call the SHIFT framework. Disclosure, the slides that I'm about to present, I will go through them really, really fast. And I know that some of you are like, am I gonna take the picture of the right slide? At the end of my presentation, I will give you an opportunity to scan a QR code so that you can have the highlight of my slides, as well as an inclusive product design checklist to test if your company is actually in line with inclusive product design principles. So bear with me, a lot of content, but you will have access to it. And so in having very practical ways to introduce the concept of inclusive product designs when you go back to your companies or your team, etc., the first step is to sensitize your teams, right? Communicating the value of inclusive product design. Then teaching your teams how to harness the different dimensions of diversity that we talked about and keep them at the back of their mind as they're designing products. Then find ways to integrate product inclusive practices with your current workflow, right? No need to reinvent the wheel. What are ways that you can actually integrate it in the way that you're doing things right now? Foster, how can you then foster an inclusive, a culture of inclusivity? And then how do you then continue to communicate the transformative potential of leaning on these principles? And so this is a very simple framework, easy to remember, and I'll walk you through it a bit more. When we think about sensitize, right? All right, so I wanna talk about inclusive product design. Where do I even start? What are compelling arguments that I can use to start the conversation? Things such as companies that adopt these principles usually have a great social impact and market user expansion. There's also the fact that it can help identify previously ignored problems that you didn't think about before. And lastly, it can help build products that will appeal to millions of people that were initially overlooked by the potential customers that you had in mind. So those are kind of like 3 things that you can introduce in conversation to be like, hey, I learned about this thing called inclusive product design, and let me tell you about it. Then harness, right? What are the different dimensions of diversity that you can tap into as you're designing your product? We looked at this example before, but one very easy way that I like to kind of like showcase this example when I'm having just regular conversations is, what if I were to tell you to market a stroller? Most of you would probably be like, all right, if I'm going to market a stroller, I will market it to a woman, probably a millennial woman. Well, what if strollers were marketed to caregivers and taking the definition of caregiver and going like, hey, a caregiver can actually be a woman, a single father, an elderly person in charge of an infant, and so kind of going beyond the idea of who was I thinking about initially when I was designing my product, my services, etc. And so this concept allows unintentional kind of like biases or inclusion, and allows for to build products that serve a broader consumer base. Integrate. What are ways that you can actually integrate this to your workflow today without having to kind of like disrupt all of your team's activities? Well, in product design, there are 4 main touch points in which you can apply an inclusive lens to what you're already doing. So at the ideation phase, you can encourage your team to be like, hey, as we're thinking about this product, how can we push the boundary further and really expand the definition of our user? At the UX and research phase, really think about, all right, as I'm developing this feature, would I develop this feature differently if my customer avatar was different? At the user testing phase, making sure that minority and majority users are brought to the table to really look at your prototypes and point out things that you might have missed in your initial designs. And in the marketing space, being mindful of telling stories that are relatable to a broad set of potential consumers. And so those are kind of like the 4 stages of product design that already exist, that your team is already going through, and how you can push the boundary and really push the thinking in terms of who are we designing for. Foster, right? It's great. we introduced this concept to our team. Our team is thinking about it, but then how do we keep these concepts alive within the company? Well, it's not the job of only one person. Leadership plays a crucial role in setting the tone from the top. Key stakeholders need to be held, need to be committed and held accountable, and the company needs to clearly state that inclusivity is something that matters through its policies and processes. And so in order to keep teams engaged and motivated to continue to apply these principles, it is essential to really get the buy-in participation of the key stakeholders in companies. And then last but not least, continuing to communicate the transformative power of inclusive product design. At the end of the day, it's a great concept, but if there's no buy-in and people are not willing to invest the time that it takes, it will be useless and it will die. And so building compelling business cases to your higher-ups is very important and somewhat crucial. Important items that these business cases should include and could include are the fact that identify the market opportunity of key demographics. Hey, we're building a product and I realize that like most of our consumers are men. Did you know that the world population is 50% women and they have trillions of dollars to spend on products and services? That's kind of like an example of a key element that could be part of a business case to really engage your key stakeholders in having some buy-in on the topic. Recognizing what real users want. A lot of times, as we design products, we're not really tapping into the current trends and the current needs of consumers. And so kind of like going out there, seeing what's out there and realizing, hey, we're building these products, but at the end of the day, this is what users truly want, which leads me to the second point, identifying what's currently being offered versus what users actually want, right? There's numerous studies out there who document the reason why a lot of Americans are not engaged in having kind of like a more active role in their finances. And so taking these studies, illustrating the gap between what you are building, what users actually want, and really kind of like presenting this as an opportunity to serve this untapped market. And so those are just a few of some of the items that can make a very compelling case to your stakeholders to really engage them in wanting to design with an inclusive lens. And so the SHIFT framework is kind of like one of the things that I like to share when I talk about inclusive product design. And that said, I only covered 3 things. And it is impossible for me to share everything that I know about inclusive product design in 24 minutes. So like I said a few minutes before, I wanted to give you a bit more than just me talking for 20 minutes. And so what I would like to kind of like leave you with is the highlights of my slides, as well as a list of inclusive product design practices, a checklist, not just a list, a checklist, so that you can take it back to your companies, to your teams, and be like, hey, is there something that we could do in terms of how we design our products and services so that they are accessible to a wider range of users? And the way to do this is simply to help me become a better speaker, become a better amplifier of the message by providing some feedback. I know that we have been scanning QR codes for a while now, but the way that this works is very easy. You just scan the QR code, enter the code TALK. Now, I know that this slide says enter the word TALK. However, I would invite you to enter the code SPEAK, S-P-E-A-K. Now, Alexandra, what happens if I enter TALK instead of SPEAK, SPEAK instead of TALK? The same thing will happen. You'll have access to the content. However, by entering the code SPEAK, S-P-E-A-K, you'll have the content available right away on your mobile phone. And if if we run into each other later on today, you can ask me questions and we can dive a little deeper on the topic. And so now what? This was great. You did your thing. I'm a little convinced, not too much. But how do we end this conversation that we've been having? Well, I am not a celebrity and I'm definitely not Rihanna. However, Miana did something that was truly inspiring to me when, in one of her acceptance speeches, she encouraged the crowd to tell their friends to pull up to the conversation of the message that she was advocating for the day that she received her NAACP recognition. And I want to do the same. I want to give you the same invitation, right? If there's only one concept that you thought was interesting in what I shared with you today, as you go back to your businesses, to your teams, to your hometown, I want to encourage you to do the same, right? Tell your friends to pull up to the conversation on inclusive product design and inclusive product building, because at the end of the day, billions of users are yearning to be served by your products, and they have the purchasing powers to do so. And I really hope that on their behalf, I was able to convince you that building products that transform the way we all live is a winning business strategy. Thank you.
All right, I think we're gonna go ahead and get started here. It's just a little bit before 3. So our next session is Doing Well by Doing Good, where impact meets opportunity for financial institutions. So joining us is Gregg O'Neill, Chief Revenue Officer of Impact, Daniela Corrente, Chief Strategy and Business Officer of Suma, and Anthony Oney, co-founder and chairman of Cloverly and managing partner and CEO of Elevate Future Fund. And then moderating is welcoming back our sponsor with Method, Michael Lewandowski, Principal and Financial Services Lead. So I will take it from there, hand it over to you, Michael. Thank you.
Thank you, Mary. Really excited to close out our financial health and inclusion section today with a conversation with some do-gooders. So people who are actually in the business of doing societal good. And so to kick us off today, I really just want to give everyone here an opportunity to talk a little bit about themselves, their role, and the ways in which their businesses actually target providing societal good. So we'll just kick it off that way with you, Gregg.
Thanks, Michael. Welcome, everybody. As Mary mentioned, I am the CRO of Impact. I've been with them for 4 years. And Impact is a marketing technology company. We position ourselves in what's becoming known as purpose tech, and it's the convergence of e-commerce giving, MarTech giving, and FinTech giving. And what we do is we work with banks, financial institutions, retailers, loyalty program operators, and then CSR, corporate social responsibility organizations. And we empower them to set up and operate community giving programs. And what that does, it allows the brand purpose to align with their customers or consumers' purpose, and allows the customer, or technology allows the customer to choose the nonprofit they want to donate to in their local communities, which is a really important concept. Allows the customer to choose how much they want to donate and when. And there's a lot of other technology and services that goes into that. Today we work with about 50 small, medium-sized banks and credit unions. We're embedded into the FIS digital banking platform. We also work with companies like Starbucks, Target, and Walgreens. So if you get a chance, take a look at our website. And their programs are phenomenal examples of how to do community giving the right way with really great results.
Good afternoon, everyone. Anthony Oney, so glad to be with all of you here today. I'm here wearing 2 hats. One hat is the founder of Cloverly, and the other hat is the managing partner of the Elevate Future Fund. So I'll start off with the fund first and talk more about Cloverly. I'm one who is led by my passions, and my passions is really around impact at scale. And I've been really fortunate to, for the past 2 years now, join Energy Impact Partners, which is a $3 billion platform built for the clean energy transition. I am very fortunate to be running one of the funds inside EIP called the Elevate Future Fund. And this is a $100 million fund that's focused on providing capital to diverse teams and founders that are working in the clean energy space. We've now since closed that fund earlier this year and been actively deploying capital to early stage companies, C to early B companies that are in a very meaningful way working to accelerate the transition to a clean economy. You know, obviously most of you now know around just how important climate change is. And we are really built for that transition, working with over 65 strategic partners across the globe in making sure that we are making those kind of early stage capital deployments in whether it be things like hydrogen, clean fuels, nuclear, all the way to electrifying industry as a whole. So very fortunate to be doing that work. Secondly, I also was the founder of a company called Cloverly that's based here in Atlanta. Our CEO, Jason Woodward, did not make it here today. He just had a kid, and so I'm dropping in for him and the team. But Cloverly is a platform that is building critical software for climate action, really focusing on the voluntary carbon markets and ensuring that we're bringing transparency, ease, access, and scale to the carbon markets. And so we are now working with over 200 companies globally, companies like American Express, Visa, Salesforce, Estee Lauder, and a number of many others in the financial and banking sectors to ensure that we're creating carbon neutral solutions for the operations, but also the end customers as well.
Daniela Corrente, I'm the Chief Strategy and Business Officer at Suma. We're the #1 fintech platform for young Latinos in the US. We're the first one to be actually creating financial tools and education that focus on in culture and not in language. Because maybe it's a surprise to a lot of you, but 80% of Latinos in the US are under 40, and they prefer to speak English over Spanish because this is home. This is where they're being born. So we're actually tapping that market that represents hundreds of billions, are bringing the financial stability, financial content, and financial support that nobody else is giving them. Our mission is highly focused on helping close the wealth gap, and we're currently working with Wells Fargo, Chase, Fidelity. We have large partners on the financial side, but also on the non-financial, like Match.com, the National Association of Realtors. Everybody wants to tap into that market because they understand that we are the future and there is money to be made when it comes to the Latino market.
Thank you, everyone. Three very different but all well-aimed concepts. And so what I'm really interested in digging into first is culture, ways in which from a mission and vision perspective all the way down to the way you measure success in your organizations, that you embed that societal good goal throughout the culture that you have with each organization. So maybe Gregg, starting with you.
The culture of impact really, in terms of creating social goodness, really became our business model. So when you look at our mission, it's we want to grow the world's heart one by one transaction every day. And our vision is to create this global infrastructure where every consumer, every corporation is created and embedded into this community giving ecosystem where whenever you shop, you give, whenever you swipe your card, you're giving. And so that really is our business mantra and our culture. Everybody who works for the company came from another organization. I was in loyalty marketing for about 30 years. And for me, it became stagnant. And what a great way to really amplify what happens in that space by, basically allowing people to donate their currency, billions of dollars in currency, to nonprofits to do good with that currency. To talk about some metrics and what we measure, we have a client that we work with, and I can't mention their name, but you'll probably figure out who it is, that does an amazing job of giving. They have 100 million members in their loyalty program, and this is how we measure good. They basically, every time you shop, you earn a vote. And last year in 2022, this company, and we processed over 202 million giving transactions that went to 2,500 charities in local communities, and it resulted in over $7 million being given to those nonprofits. So that's the culture of impact and some of the metrics and how we measure social good with our clients and partners.
So starting off on the Cloverly side, I started this company because I realized that there are a lot of people who actually care about the planet. The hard part is actually connecting in ways and connecting with solutions to be able to do that really easily. And so the genesis of Cloverly was really decreasing friction for really businesses to be able to engage the consumer in a very climate-friendly way. So that's really the DNA of what we do. And so to the things that we do, whether it be the over 16,000 different carbon removal projects that we have on the platform in creating that transparency, that ease and that access to the way we build our software platform, there's this DNA of making sure that it is really easy and reducing that friction. One of the other things that we are really hyper-focused on is around that level of transparency and making sure that not only for the standards that we hold ourselves to, but also for the engagements that we have with our customers is to ensure that we are providing the highest quality of carbon removal in the world. So, for each of the projects that we have, we are obviously looking at the highest quality from the 3 different agencies that currently rate those now. We've actually brought on a climate scientist that's part of our team that has his own, we developed our own proprietary metrics that we're using so that we are filtering in only the highest quality projects. And so we're very excited to show that we have over 60 different dimensions above and beyond what those third-party agencies have in rating some of these projects. And then from just implementation standpoint and the scale in which we're doing it, I think we represent almost 98% of the global market right now in access and exposure to marketplace and continuing to innovate and making sure that the different corporate partners, whether you're trying to buy carbon removal projects directly through our marketplace platform, or you're trying to do this, building this into your product, that ease of entry is it. So it's really easy to get started. If you go to cloverly.com, you'll see that. On the investment side, we measure a few things, but in short, we believe that we ought to have a high expectation of capital, right? Beyond just financial return, they are returns for the planet and there are societal returns. So these are not mutually exclusive. And so when we're going through our investment criteria and looking at companies, we are measuring that. So we actually have a great, fantastic ESG report. It's on our website to download. But we are, for each of the investments that we look at, where we are measuring the GHG emission reductions, the carbon impact reductions for those investments. We track it at the initial time of that investment and all the way through the life cycle of that investment portfolio. On what we do on the Elevate Fund, we're also looking at the impact, the societal impact, along with environmental impact from investments that we make. We're looking at the diversity of the team, the diversity of the board, the communities which they serve. And I will tell you, I think Alexandra just did a great presentation on the importance of D&I. So if you haven't seen it, go back and watch it. She has the slides out available. But there is a multiplier. There's an opportunity for investing in Latinx founders and people of color and underserved communities. It's huge. We closed our fund in 21. We raised over 112 million, and we've deployed $37 million already. And so there is a market for companies and entrepreneurs who are doing some fantastic things with a different lens of the world and how to solve these really huge climate problems. So, we have a culture of innovation, but we firmly believe that we ought to have a higher expectation of capital, one that works for the greater good of the planet and the world.
Okay, let's talk about mission first, and then I'll jump into culture. From a mission perspective, our mission is to help close the wealth gap. And I know that's a very lofty goal, but if you look into data, Latinos contribute 3 trillion to the GDP. If we were an economy, we would be the 5th largest economy in the world. Okay, so what happens? Why don't we build generational wealth? Well, nobody has really taught us. This new generation of Latinos, they're college graduates. They're making money, but we don't know how to invest it. We don't know where to put it. We come up with parents that hide money underneath mattresses, or the 20,000 tiny envelopes that my grandma used to hide around the house, right? So for us, I see somebody laughing, you can probably relate, but for us, that's heavily important, right? And that's where the culture piece comes in. So before I said that we lean into culture and not in language. And what that means is that by us understanding things and nuggets that are very relatable to our culture, because that can be in English, in Spanish, in any language, but I was making fun earlier that there are things like when you go to a first-year-old party and you're there until 1 a.m, that's very Latino, right? Any Latino can relate to that. We connect those things with finances. We show you how ripe an avocado is compared to how ripe your credit is, right? Or a hard and soft tortilla versus a hard and soft credit shield. And we apply it to everything because we want finances to feel simple, to feel attainable, and to be relatable to every day. And the topics that we're talking about are not only relatable to Latinos. You will be surprised at how many people don't understand a 401k. It doesn't matter like their background, how much money they're making, because we all start our first job, we're eager, we enroll in 1,000 things, and then 5 years later, you're ashamed to ask. You don't want to ask. And so we're sort of breaking those stigmas and making this achievable for the Latino market. And from a theory of change perspective, we're highly focused on these young Latinos because unfortunately, when I talk about, we do finances for Latinos, everybody has a certain profile in their mind. But for us, it's highly important to have people understand the potential, the value, and everything that can be achieved with this younger generation.
Before we move on, I also want to give a shout out to the inclusive design presentation that came before us here. And if we could maybe leave at the end with that QR code up for anyone who missed that. So I think that would be great. Moving from culture, really want to talk about your clients, your customers, your user needs, and how you take your vision and mission, and then also communicate that the value that you're delivering as an organization to those clients, customers, and users. Really want to kind of hear a little bit more about that.
Yeah, really important question. So I would tell you, whether it's a bank or a big brand, what most of our clients are looking for is they want to be present in the communities that they serve. There's a really interesting stat, and by the way, if you're interested in any of the philanthropy metrics, two great basically studies, Giving USA 2023 just came out, and then Cohn, Porter, and Novelli. But Cohn, Porter, and Novelli did a study 2 years ago that showed that consumers across all demographics and generations prefer to donate to local nonprofits versus a national nonprofit. Now, there's nothing wrong with donating and supporting a national nonprofit. That's great. But when consumers donate locally in their community with nonprofits and charities that are meaningful to them and relevant, they'll donate 3 times as much as they would to a national nonprofit. And they're much more engaged with the brand that supports those nonprofits in their community. So that's one of the most important things we see, to allow the brand to be present in the community, is to offer nonprofits that are in the community. Companies like Target that we work with, Walgreens, Starbucks, do a great job of that, and banks do as well. Banks tend to be, I think, a little bit more in the moment. We'll do sort of disaster giving matching types of campaigns. What we do for them is we basically curate the appropriate list of nonprofits that is going to engage their customers. And the other thing we provide is what we call vetting services that make sure that the nonprofits they're presenting out there in the public domain to their customers are reputationally appropriate. So those are some of the things. And finally, the other needs that they have is we need to make sure that the money that was donated by a customer actually gets to the nonprofit that was designated for those funds, and to communicate that back to the customer to say, hey, thank you for your donation. Your $75 went to, in my case, Phil Abundance, the food kitchen up in Philadelphia. Really powerful messaging, but you have to have all of those components in that, in those types of community giving programs to make them successful.
Thank you. On the Cloverly side, what we all recognize now, and we hear this a lot from our corporate partners that we work with, is that a lot of consumers, are yearning for more ways to connect to green services and products. So one highlight I want to make is the work that we're doing with American Express. So right now, Cloverly powers the back-end carbon offset program for all North American American Express cardholders. And part of that engagement, as we were working with the American Express team, is to ensure that the customer really understood what these products are, right? Coupled with the desire to be more green in their everyday lives, and figure out a way to make it really easy and accessible to be able to do that, right? Behavioral action is one of the hardest things to code in for people, right? You can have all the desire that you want to be in the world, but making sure you're recycling everything you want to recycle or offsetting your carbon is just challenging on a day-to-day basis. So they brought in a tremendous amount of insights that they have from the customers, the desire from the customers and whatnot. And we started working with them for almost a year in really co-designing and building out a platform. And one of the unique things that I think we do very well with them is to be able to show, one, I think, kudos to American Express in being able to provide customers with an easy way to offset the credit card purchases that they have from daily usage. And for us was being able to not only to facilitate that for them, but also be able to show with a great level of transparency the ability to the projects that are being in play. And once customers are able to connect with those projects and see those projects and know that these things are not just some phantom projects out here, but these are real projects that you can actually measure. You can see all the detailed stats around it and a lot of third-party verifications brought to it. You see that goes up. For a lot of the e-commerce customers that we work with, we've also seen that they actually have increased purchases and feel good about who they're working with. So in the case of Estee Lauder, the brands that we work with under Estee Lauder, you see that there is there's an uptake on the e-commerce side as a whole. I was really excited yesterday. Lisa Jackson, who is the corporate responsibility person at Apple, they just launched the new iPhone 15 and Apple Watch and all that kind of stuff. But they just announced yesterday that they have end-to-end carbon neutrality on 2 other products. I think on the 2 versions of the Apple Watch. And I think we're seeing more and more companies, whether it be Apple or Microsoft, who's one of the LPs in our fund, really focus on ways to make this easier and connect with customers. And so designing solutions to make that really easy is a way to bring that forward.
You asked what the consumer needs, right? And I've been talking a lot about our consumers since we started, but it's a pretty universal need to feel seen, and that's something that hasn't been the case for Latinos in finances, right? So that's something that's very important from both perspectives. From the perspective of the consumer itself, it's having the security, the know-how to be able to walk into these financial institutions and feel savvy, which is a new concept for many Latinos that are now making money. And from the other end of the spectrum, and that's why I talk so much about data and about people understanding the power that Latino has. It's for people to break all those pre-existing biases and stigmas that they have about the Latino consumer, right? So that's why I never get tired of repeating over and over again the power that we have, how much money we're spending, right? How we're impacting every single business, from beauty to technology, every single thing, because 1 in 5 people in this country are Latinos, and that only keeps growing. There are states with 1 out of 2 babies that are being born are Latino. My partner likes to say that it's like hello, hola, because it's the truth. That's what we're experiencing. So from the point of view of the consumer, it's really understanding the power that they have, and for everybody else to see that too. And we call our theory of change, or the focus in this young Latino, because there is the young Latino multiplying effect, where a lot of people in finance focus on the older Latino, which only represents 20% of the full cohort. But this young Latino, it's actually impacting the finances of at least 3 family members around them. So when I learn something about finances, guess what? I'm the one that tells my mom. I'm the one that tells my grandma, right? I'm the one that passes that information. It's not the other way around. So when you hear companies that are highly focused on either new immigrants or in Spanish, amazing, go take that target. We want them to take that target because it's important too. But the reality is that on an everyday basis, it's not the other way around. It's not the parents that are teaching the kids. At this point, it's us that are driving financial decisions for the ones that surround us.
we make it through without dropping. Success, right? This is good. Relay team here. We're gonna do a race afterwards. So final question. So from me before I open it up to the panelists. So think about your questions as we do the final rundown here. But I want to get from these do-gooders what some of the unique challenges are of a do-gooder business. Certainly, it's not without that. And so I want to kind of hear a little bit around what each of you face and have to encounter that might be a little bit different than just running the standard business looking at profits.
Yeah, it was really interesting when we're looking at challenges, I'll say with consumers, and we're crafting and curating a list of nonprofits for a community giving program for one of our clients. I'm sure there's not a surprise to anybody. You have to be really sensitive to the politics around the types of nonprofits you're presenting. I don't have to tell you what happened with Bud Light and Target and those types of things. Target recovered, really gracefully. Bud Light's been having a problem. So we really have to be sensitive to the types of nonprofits that we're presenting to consumers. The second challenge we face, and it really is with the companies we're working with, I guess there's no easy way to say it, are the internal politics. And if you think about it, this whole concept of giving and where it resides in a corporation is kind of a new concept. So, honestly, we see turf battles about who owns giving, and what's happened traditionally was owned by the foundation of a corporation. And now there's been this, slide over to marketing is saying, hey, this is a great tool that we can use to engage our customers in really unique and different ways, because traditionally the foundation doesn't tell the good that they're doing. You have to go look in the corporate report, it's buried in page 40. So we have those little turf battles, and by the way, it's not just marketing and foundation. There's CSR. There's going to be tech involved. There's going to be corporate compliance, legal, finance. So there's all these groups. One of the things we have learned through experience over 7 years is that we have a strategic blueprint that we take in and say, hey, you need to consider all of these constituencies and stakeholders, and here's the elements you need to bring together. So everybody co-creates this program together. So that's been a challenge, but we've learned to navigate, through it. So.
The thing that excites me the most about being in this climate tech space and clean energy transition space is that this is a $100 trillion economy ahead of us. Right now today, there's $100 trillion globally already committed for this transition, right? This is going to be bigger than the internet. This is one of the largest economic shifts that we'll see. The thing that scares me the most being in this space is that this is a $100 trillion transition. And if we're not being more thoughtful and inclusive around not only taking advantage of ways to close the economic and wealth gap that exists within minority groups in this country, but I really believe that we will not fully solve climate if we're not being inclusive on who gets to solve those problems and who gets to participate in closing those gaps within the communities that we see. This is a global problem, and it requires a global collective to help solve it. And right now, when you look at the VC landscape, these stats are not uncommon, but less than 1% of funding goes to Black founders, less than 2% goes to Latinx founders, and women founders, especially women founders of color, don't even show up on the data trends, right? And so we need to make sure that more and more folks are involved and included in solving some of the biggest challenges that we see in our world.
The challenges from being do-goers, I want to clarify two things. We're not only do-goers, am I saying that right? Okay, right. We are a double bottom line company. So we have obviously the social responsibility and our mission, but we're also in the business of making money. We're venture backed. I'm super excited to say that we just oversubscribed our round, and we're actually, a C-suite of Latinas, all Latinas. We made history by being the first C-suite of a financial technology company that is composed all by women or by Latinas, focused on empowering our cohort. So being the biggest challenge, I wouldn't call it a challenge per se, because it's finding mission aligned investors, right? When people see the opportunity, obviously this is a very lucrative opportunity, but not everybody is aligned on the mission, and that's something that we've passed on investments because simply the people, the fund, they were not in line with what our mission is besides just only making money.
So I would say that's the only thing, but I don't think it's a bad thing. Not all money is good money. So it's actually something that has helped us sort of filter in who's the right profile for our cap table.
I know we're nearing the end here, but I do want to open it up and see if there's any questions from the audience for our panelists today.
Thank you all for sharing amazing purposes of all the three businesses. I was interested on knowing a little bit more how do you actually do well? What's your actually revenue model?
So good question. What we do from the impact perspective is we also have a foundation that is basically it's a 501c3 organization certified by the IRS and all of these state regulatory constraints that we have to be in line with. And we basically charge a fee to the sponsoring company when we process a donation. So it's pretty simple, and it basically funds all of our expenses. And in some cases, we'll also charge a technology fee if we have to build additional technology. So we are a tech company, but primarily it's the processing fee.
On the investment side, it's pretty simple. We're a traditional investment firm. So we've to date made 13 investments out of the fund. Typically 5-year investment period, 10-year fund. So the math there is pretty simple. On the Cloverly side, we have a lot of different ways we generate revenue. One is through our direct purchase platforms or the marketplace, where companies that do the calculation of their own carbon footprint, they want to mitigate that, they can come to the Cloverly marketplace and do a direct purchase of carbon. We have an API, a sustainability service platform, and so there's a kind of a recurring SaaS kind of model that's associated with that implementation. And then we also have a supply marketplace where suppliers can list their inventory on our platform, and we curate and manage the entire end-to-end process for suppliers. There's fee for service on that as well.
For us, is business intelligence, memberships, and referrals. And one thing that I was talking actually with Sarah yesterday from Rep the Black Labs, it's we have a huge responsibility. Because when we talk about referrals, for example, and we're driving this cohort to certain products, we really need to make sure that there are products that are not predatory, that there are companies that actually want to do good for our cohort, because that's why I say that we have the social responsibility for, and they're making money. So we have those 3 different angles in which we monetize.
I have to apologize, we're out of time today, but I'm going to hand it back to Mary to conclude our session on financial health and inclusion. I'm sure you'll be able to find our panelists as they make their way out if you want to have any additional questions or comments. Thanks, everyone.